Okay guys, I welcome you to my channel, which is ACCA Concepts, Problems and Solutions. And I have actually just enhanced and taken a further step, because as we are grooming ourselves towards understanding the concepts related to the aircraft manufacturing, aircraft ideas, when we talk about from the basic engineering or mathematical standpoint to whole process of actually manufacturing a full-fledged aircraft from a theoretical standpoint, from the statistical standpoint, and from the numerical or from the uh, model-based standpoint, and from the normally what we can actually take at the end of our whole journey when we talk about aircraftmanship. And the purpose of producing the videos when we talk about aircraft is obviously to get an understanding how we can build from design, from design to manufacture, from manufacture to selection of materials, from selection of materials, of processing of materials, whether at initial stage to advanced level, and taking all the data, taking all the information, collating them, collaborating them, adding on and on, correcting adjustments, and after at the end you can say that normally what will be the final product when we talk about as an aircraft, taking all the concepts, taking all the angles, minute to bigger, and from advanced level, taking the details and just noting it down from the theoretical standpoint, and obviously uh, asking for a comprehensive response from the audience, from the viewers, from the public in large. Probably this domain is not related to the public in large, but obviously we can say that this is a very critical, a very interesting domain of engineering when we are talking about the aerospace engineering or aeronautical or craftsmanship. The purpose of this video, as we are actually providing this video for our channel ACCA Concepts, and also about the ACCA concepts and problems and solutions. And also you can say we have covered so many videos on ACCA, which is a very interesting and yet again an interesting field of study when we talk about from the professional accounting or from the professional accounting standpoint. And I have actually asked you in one of the previous videos in this channel that we want to actually uplift your understanding that it is not just taking out the historical perspective of an accountant or the financial analyst, or taking out just the data and analyzing it, and that's it, because that's just a limited domain of work when you talk about a finance department or financial workings. Because these all no, most of the 50 to 70% information or data is based on the historical information, which is just a repetition of what we have already been actually practice, what we have already done. It's just putting that information into a computer-based format, or you can say into the software is just entering the information and just completing out the legal requirement of producing records and maintaining records. And obviously just at the end of the day you want to have the uh, audit procedures to be done from taking all the information uh, from that legal or software based information, obviously the financial or the accounting one. But as we are discussing the aircraftmanship, the nautical airspace engineering, so why not to discuss the financial, the aviation financial as well? And why, instead of actually correlating it to the mathematical finance, I have actually taken it with this actually channel, which is about ACCA, because obviously ACCA provide us the basis of doing the work, and this video also forms the basis of the also form the basis of the aviation finances when we talk about the dealing with the finances, because as you know, the starting point of our channel is financial management. And when we talk about the financial management, we need to know that in financial management, all the tools or the instruments of finance are already being discussed, even at the ACCA level as well. But just taking ahead and talking in perspective of aviation finance, how we can actually introduce or relate the concepts of finance in aviation, and also we can understand our all together aviation finances details. So with this, I just have taken out paper, an article recently written by Practical Law, that is a firm, and that states that Practical Law provides legal know-how that gives lawyers a better starting point. Our expert team of attorney editors creates and maintains thousands of up-to-date practical resources across all major practice areas. We go beyond primary law and traditional legal research to give you the resources needed to practice more efficiently, improved client service, and add more value. If you are not currently a subscriber, they are inviting you to actually take a trial of their online services at legalsolutions.com. Practical Law. For more info or the scheduled training, you can call at this number, or you can email at referenceattorneys@fr.com, training.com, I believe. TIA.com. So this is 6 of 19 that is of written of Practical Law. And when we talk about the copyright law 2019 Thomson Reuters, all rights reserved. Use of Practical Law websites and services is subject to terms of use. static.legalsolutions.thomsonreuters.com static /static /agreement. So this was actually, you can also go on the journal terms and conditions, and that was also published on 2017, which was on the July of 1st 2017. You can go and visit the terms and conditions, and we talk about this Practical Law. We talk about the Thomson Reuters as well, so especially because this whole read, when I'm going to actually go through the whole write and read by Thomson Reuters. So we will going to see that obviously the journal terms and conditions, they have told us to actually follow journal terms and conditions as well. So you can go through at the read, which is on 2017 July the 1st, which is the basis of actually this Thomson Reuters. Thomson Reuters is the basis of the Practical Law, and Practical Law and Thomson Reuters are actually doing the both work. But obviously this is the basis is their general terms and conditions. So you first visit this, and then you can obviously go through the Thomson Reuters and about the Practical Law as well. So let me actually provide you the Practical Law. The answer company is Thomson Reuters. Obviously, as I said, the answer company is Thomson Reuters, and there is a Practical Law, and they're just combining the both experts, the both institutions, and obviously they are combining and answering it. But the basis is the journal terms and conditions that was on July the 1st 2017. So this is just a combination of these two, and it is obviously that is all been variously put in by the by what you can say the ACCA financial management. That's just an addition, you can say. There's not nothing else. But talking from the aviation purpose, it is a very good read. You just have to actually go through the link as well that I've already mentioned. Please go through if you are talking about the aviation, and that is a very, very good read. Let's see what we have. Structuring aircraft financing transactions. Practical Law Finance with Richard Furray, Holland and Knight LLP. Based on an original article by Mara Abels, Darcy Binder, James Hayden, and Christian Henson of White and Case LLP. This note discusses the structures typically used in the aircraft financing structures, including secured loans, sale, leaseback, finance leases, and Japanese operating leases, enhanced equipment, trust certificates, and export credit agency transaction. This note also discusses the advantages and disadvantages of these structures and the factors that may cause an airline to consider one structure over another. The purchase and operation of aircraft and related assets by an airline airline, aircraft lessor, or other entity may be financed using many different structures. This note discusses the most common aircraft financing structures. For an introduction to aircraft financing generally, you can see practical note, aircraft financing overview. Aircraft finance transactions are based principally on one or a combination of three basic structural concepts. A secured loan, whereby a borrower incurs from a bank or other financial institute a loan secured by a mortgage over the aircraft. The ownership and lease of the asset, involving either an operating lease or a finance lease. A capital markets transaction, whereby an entity issues bonds or notes secured by a mortgage on the aircraft. Many transaction structures combine more than one of these concepts. So commercial bank finance secured loans. It is a basic secured loan structure. A lender makes a loan to an airline or leasing company to purchase an aircraft from a manufacturer if new, or seller if used. The loan is secured by a mortgage or other security in trust over the aircraft. The airline or leasing company owns the aircraft from the outset. The airline or leasing company may operate the aircraft or lease it to another party. Disadvantages of the secured loan structure. This structure raises several issues that may make it an unattractive option for some airlines. These issues include the loan is a balance sheet transaction and is full recourse to the airline or the leasing company. The loan documents include typical events of default and other provisions customary to secure loan transactions, which may unduly restrict the leasing company's or the airline's ability to operate its business. For a discussion of some of these restrictions, see practical note and loan agreement negative covenants and standard clause loan agreement negative covenants. The leasing company or airline may not be investment grade, resulting in a more expensive loan. The airline or leasing company may not be able to incur the amounts needed to purchase the aircraft under the terms of its existing loan documents. Loan agreements typically include provisions that restrict the amount of debt a company can incur or a financial covenants that would be breached if additional loans are incurred. Secured loan structure. A diagram of a typical secured loan structure used in aircraft financing is set out below, which is the manufacturer and or the seller, the purchase price is this, the purchase agreement, the aircraft, airline, leasing company, the loan amount, the lender. This is the mortgage, loan payments, loan agreement. Loan agreement goes to the lender, loan amount goes to the airline and leasing company. The purchase price, obviously that is by the manufacturer and the seller, set by the manufacturer and seller, and normally that aircraft went to the airline leasing company, and there's an agreement or the lease agreement between the lender and that company as well. So leasing structures, obviously when we have the aircraft in our have just an agreement between the lender and the leasing company. What are the structures? There are many leasing structures that may be used to finance aircraft, including operating leases, see operating or through lease. Finance leases, see finance or capital lease, and leverage leases, see leverage leases. Japanese operating leases, see Japanese operating leases, which is JOL, and sale and lease back transactions, see sale lease back. While there are many differences among these leasing structures, they have many characteristics in common. These include the airline or leasing company does not own the aircraft. At the end of the lease term, the airline or leasing company returns the aircraft to the lessor, although in certain structures the leasing company has the right to purchase the aircraft. Okay, operating or through leases. In an operating or the true lease structure, an owner or lessor acquires or own aircraft that is lessees to an airline or other lessee, retains substantially all the risk and rewards incident to the ownership of the aircraft, regains possession of the aircraft at the end of the lease term, releases or sells the aircraft once that is returned by the previous lessee. The owner or lessor is frequently an owner trust owned by an equity investor and leasing company or other airline. Types of operating leases. There are two types of operating leases. A dry lease, in which the owner or lessor only provides the aircraft and the lessee is responsible for operating, maintaining, insuring, and providing a crew for the aircraft. This is typically the case where the owner or lessor is an owner trust and neither it or nor the equity investor in the business of or has any interest in operating aircraft. A wet lease, in which the owner or lessor retains operational control of the aircraft. operates flight for the airline, maintains and insures the aircraft, and provides a crew for the flights. The cost of providing these services are paid by the lessee under the lease. A wet lease is typically used when the owner or lessor is an airline or a leasing company that has some expertise operating aircraft. Advantages of OL. The advantages of the operating case structure. An airline or other lessee include giving lessees greater flexibility in managing their fleet because they can contract for increased capacity only as and when required. Until recently, lessees were not required to record these lessees on their balance sheets. However, to address concern that this approach did not always provide an accurate reflection of an entity's leasing transactions or its liabilities, lessees are required starting in 2018 to recognize a right of use for the lease asset and a lease liability on their balance sheet. Recognize a single cost calculated that the cost of the lease is allocated over the lease term, generally on a straight line basis. Classify all cash payments as operating activities in the statement of cash flows. Disadvantages of operating leases. While operating leases enable airlines to manage their fleets, this can be a more expensive structure relative to other forms of financing. For example, in wet leases, the owner's or lessor's cost of providing all the services are passed to the airline lease in the form of higher lease payments. Operating lease structure. Manufacturer is